Hello traders, in this video I am going to be taking a look at flag chart patterns. So here we have a guppy chart, pound yen 1 hour chart on the MT4 trading platform. With the flag chart pattern you don't need any specific indicators, you just need drawing tools so you can mark the flag on your platform. Basically with the flag pattern you're looking to find a bullish flag in an uptrend or a bearish flag in a downtrend. So first of all, what you need to do is first find a trend. So we have an uptrend here, yeah? This is going to be our flagpole. Okay. And then we're going to look for the flag, which is marked out, I would say, here. And here. Perhaps more like that. Okay, so how did I decide that was a flag? Well, what we looked for was a pullback on this uptrend. So we had the uptrend, we had some consolidation, resistance, support, and this is our flag here. Our nice green and red flag pattern in an uptrend. So that's how you mark a flag chart pattern. It's as easy as that. You're just looking for areas of support and resistance within trends. Okay, so this is a bullish flag pattern, and then what we're going to look to do is trade on a breakout of the flag pattern, which you can see happens here. This is a 1 hour chart, so this resistance is decent. 1, 2, 3, 4 times, and 5 if you include this, is held up. And the breakout, you can see, is quite a substantial breakout, so traders were watching this resistance level carefully, and the uptrend continues to gather momentum. In fact, goes up significantly following on from this trade. So it's open to interpretation where you mark the flag pattern on the charts, but generally speaking, you're just looking for support and resistance, which has been touched multiple times with a good amount of price action within it. You can find this on lower chart time frames, 5 minute, 15 minute, even 1 minute. However, I find they tend to be more reliable on the higher chart time frames, primarily because there is more price data contained within them. Okay, so we can either enter on the breakout straight away, or we can wait for another pullback and enter the trend then. For that, you can use further support and resistance or other indicators to confirm entry. Let's take, for example, the ADX indicator. Basically, with the ADX, the average directional movement index, when the green line, this one here, is above the red line, said to be a bullish market. Vice versa, if the red is above the green, is said to be a bearish market. And this main line here is the momentum of the trend. I've put the 20 level on the ADX just because when this line is above 20, it tells me that there is some momentum left in a particular trend. You can use 25, you can use 30, you don't have to use it at all. I just find that if price is below 20, it tends to be ranging, and unless I'm trading a range trading strategy, I want to stay out of any trend trades. So in this instance, let's look for the ADX to confirm an entry, which could be here. You can see the ADX crosses plus green line crosses above the red line to suggest bullish momentum. This line is way above 20. So there is a trade opportunity there. We have as well bullish divergence, means higher lows there and there on the ADX, which helps confirm this trend. And to be honest, you could have just marked off the trend on your chart like that, which will tell you the same thing as the divergence there. However, it's just good for the additional confirmation, and I understand some traders appreciate the visual appeal of using indicators. Okay, so that would have been a potential entry point there. You could have used, in fact, let me just take that one off. If you would have continued this flag resistance line there, let me just mark it up on the high. If you can see where it touched this resistance point here, became support here. Okay, so that's another way you can use the flag pattern. Once it's breached in one direction, that can then become support in this case, or if it was a bearish flag pattern, it would become resistance, and you could have traded off the bounce there on the pullback, confirmed by an inside bar candlestick pattern, 3 white soldiers, various other candlestick patterns. We have a hammer, spinning top, plenty of signs that there's lots of momentum in this trend upwards. If we just zoom out, we can see that from the initial entry there was almost 1,000 pips worth of trading action there, whether you were to get in here, here, here. There's plenty of opportunity to enter throughout. I can just, if we just see an ADX trend, an ADX crossover entry there. Another one here. And you can use other indicators for entry points as well. What shall we use? Shall we use let's use a stochastic oscillator. For long trades with a stochastic, you want to look to buy when price is oversold or in and around this oversold zone, which is 20 and below, and the main line is crossing above the signal line. That indicates it's a time to start looking to buy. To clarify, you'd sell or look to sell when the stochastic oscillator is in around the 80 zone and above and is crossing downwards. And you can see there the stochastic was oversold, was crossing over, and that was on the pullback to the flag, the top of the flag, initial resistance that then became support, the divergence, the trend line. There were lots of indicators to confirm this trade, candlestick patterns, etc. So if we just follow the stochastic here, another crossover trade there. That probably I would have stayed out. I would have preferred it to be down here more. For example, here in the oversold zone, a nice crossover would have been a great time to look at that candle as well, suggesting that the bears tried to push it down. The bulls had lots of strength, pushed it back up. Nice hammer, suggesting continuation of this trend. Indicators can be lagging. As you can see, the ADX there is still thinking the sell signal is prominent. It's not until here we have the crossover of the ADX, but still that wouldn't have been a bad entry point. Stochastic confirming again, and of course you have your trend line. Just may need a bit of adjusting as you continue up, which is fine. What you wouldn't want to do is enter when price is too far away from this line, because you're just going to be buying high here and here. It's better to wait for a pullback. I mean, there are so many ways. You know, you have wedge pattern there and a breakout, a big breakout candle. There's so many different ways you can enter trends. It's just really what works best for you and your trading style. Yeah, so the key thing to do is to look for the flag pattern. Don't necessarily need to use it for your entry, but you can just be aware that sometimes it will be a fake out, which is basically a breakout that fails and price will turn back around. So have a sensible stop. I probably would have put the initial stop loss either below this area of support here or the other side of the flag. If it was the other side of the flag, it would have been wider than I would have liked. So I probably would have gone for here. And as price continued moving up, you can then trail the stop loss below this, either the trend line or the support levels, which more often than not would be the trend line in any case. And with this, it means that you can trail the position and get the most out of it instead of just getting excited and exiting prematurely around here. I mean, if you took your profit here, you'd be happy because you had a winning trade, but you would have missed out on all of this action here. That being said, you could have, of course, re-entered, but why pay more brokers' fees, spreads, commissions? When you're already in a good position, you can always just move your stop loss to break even for a worst case scenario. Close out part of your position as it's going up to bank some profits and let the rest run. Okay, so that was an example of the flag pattern in a bullish market. So bull flag pattern. Now, if we switch to the pound dollar 1 hour chart, we can look for a bearish flag. So first thing is to look for a downtrend. I'm going to mark that as a level of resistance. As you can see, it's been tested 1, 2, 3, 4 times, and then price begins to fall away here. So this is going to be the pole, the flag pole for our downtrend. Okay, and now we're going to mark the flag. So if you remember, it was the support levels and the resistance. Okay, something like that. Doesn't need to be perfect, but you get the point that that's our flag. We have our flagpole. Price has moved away from resistance, it's going down. And we have our flagpole and our flag here, our nice green and red bearish flag this time. Same principle as we looked at for the bull flag chart pattern. We're going to wait for a breakout. The support level has been hit twice, there and there. Third time lucky, we have a nice breakthrough. Can see that there's probably a load of people who were, a lot of traders, big players, institutions who were watching this particular level, hence these big candles. When price did finally breach, there was lots of indecision around here. Bearish candlestick patterns, obviously a clear downtrend there. Nice wedge pattern, price is squeezed, and eventually the breakout occurs. Bears are winning this battle and price falls. So fact, we'd still arguably be in this trade if we haven't taken all the profit off the table once we've seen this mess here. Good for range trading, not ideal for a trend, but still, if we would have entered here, we'd be up almost 200 pips. Again, you could have taken some profits around these areas, may have moved your stop loss to here just to lock in 80 odd pips. Worst case scenario, if price does turn around. In fact, stop loss could have, if you entered here, you could have moved your stop loss at this point in time above this resistance level. Might be a good place. Okay, which would have given you over 100 pips profit at the moment in the worst case scenario. Best case scenario, price continues falling and you can move your stop loss even closer above here and ride the trend as long as possible. I mean, don't know why you would go on the 5-minute charts and try and fight for 10-20 pips all day when you can catch big 100 plus pip moves on the 1 hour chart, spend less time chart watching, and have, in my opinion, more reliable signals just because there's more price data. Okay, so you can, as you see, trade the bearish flag pattern as is on its own. You might want to use indicators to confirm for you. If we just put the Bollinger Bands on there, you would have seen a breakout of the bands around this point. Basically, you could have sold based on that. So there are many, many different ways you can enter into the trend once you've identified it, as we did here with the flag pattern. You could have entered a sell on the pullback of the bands around here. Some traders may have entered the sell on the pullback of the bands around here, and I know that's before the actual formation of the flag pattern, but if we just look at the market as it is, you can see clearly, you don't need any lines or indicators, just use your eyes and you can see the price is falling down from this level here. So just wait for a pullbacks here and enter. I mean, do you even need the Bollinger Bands to spot that? No, you don't, but sometimes they have a self-fulfilling prophecies indicators just because so many traders use them, especially on the higher chart time frames, and also they can be more visually appealing. That being said, price action is not lagging, it's telling you what price is doing at any given moment in time. And if you just marked off, you know, you could see that this was holding up as a resistance level. You might have taken your trade off of that. Nonetheless, still would have been a good opportunity to enter on the breakout here. And that is the flag pattern in a nutshell. Hopefully you found something useful in this video. Just remember, try and confirm your trades with a combination of analysis, and as always, use smart money management. Thanks for watching. Please like and subscribe for more.